let's talk about one of the most maddening things that happens in trading, the fake breakout. You know the feeling, right? You get into a trade, it looks perfect, then it stops you out, and then it skyrockets. Well, if that's you, you're in the right place. We're going to break down what might just be the safest way to fix that for good.
Does this little cycle look familiar? You see that awesome breakout, you jump in feeling confident, you set your stop loss, and then, almost like clockwork, the price dips just enough to hit your stop before reversing and taking off without you. It's so frustrating, and it happens to pretty much every single trader when they're starting out.
So the big question is, why? Why does this keep happening? Well, it's because a simple breakout on its own just isn't enough information. You're basically falling for a trap that's set for impatient traders. But don't worry, there's a solution. It's a strategy called the Breakout and Retest, and it's specifically designed to help you avoid this exact headache. What you're dealing with here is a classic fakeout. It's a trap, plain and simple. But the good news is, once you learn how to spot it, you can avoid it almost every time. See, the goal isn't to be the first trader into a breakout. The goal is to be the smartest one. Okay, so what exactly is this strategy? It's actually pretty simple. A breakout becomes a real high-probability trade when the price doesn't just break through a key level, but when it comes back to test that old level. That level that used to be resistance now becomes new support. It's that bounce, that confirmation that tells us, okay, now it's safe to get in. So let's really dig in and break down what a perfect setup looks like. This isn't just about randomly waiting for a pullback. Nope, we're looking for very specific clues that tell us the odds are stacked in our favor. A really A-plus retest has 3 things you absolutely have to see. First, the breakout candle itself needs to be strong, with a big full body. That shows real power. Second, you want to see a big spike in volume on that breakout. That confirms that the big players, the institutions, are on board. And third, and this is key, the pullback, the retest, should be slow and controlled, on low volume. That tells you sellers aren't really in control. Now, here is one of the biggest mistakes I see traders make. They draw support and resistance as a single perfect line. But think about it, the market's messy. Price rarely respects a perfect line. You need to start thinking of these levels as zones, little areas where the real battle between buyers and sellers is happening. The retest just needs to come back into this zone, not hit some magic pixel-perfect price. All right, so we've got the theory down. But theory doesn't make you money, right? Execution does. So let's build a simple, rules-based plan for how to get in, where to put your stop loss, and where to take profit. No more guesswork. Your entry trigger is so simple. First, you have to be patient. You wait for the price to come back into your retest zone. Second, you look for a specific confirmation candle to form, something like a hammer or a bullish engulfing candle that shows you buyers are stepping back in. And third, you only enter the trade after that candle has closed. Remember, we are not trading the pullback itself. We are trading the confirmation that the pullback is over. Now, for your stop loss, you've got 2 main choices. The safest option, and the one I really recommend if you're new to this, is to place your stop just below the entire retest zone. This gives the trade a little bit of breathing room. The more aggressive stop loss goes just below the low of your confirmation candle, but that's a bit more advanced. Stick with the safe ones for now. You know, volume tells a story. And for this setup, here's the story you want to hear. You want to see high volume on the breakout. That's the big money coming in. Then during the retest, you want the volume to dry up, get really low. That means there's no selling pressure. Finally, the volume should pick back up to a medium level on your confirmation candle. That's a signal that buyers are back in control. And listen, a retest on high volume, that is a huge red flag. Okay, we've got the rules. Now let's see how this all looks on an actual chart. We'll check out a perfect example, and just as important, we'll go over the red flags that tell you when you should just keep your hands in your pockets and stay out of a trade. Seriously, knowing when not to trade is just as important as knowing when to trade. So if you see a pullback that crashes right back through your zone, or one that looks like a super sharp V shape, just avoid it. If you don't get a clear confirmation candle, or if that initial breakout was weak and wimpy, just move on. Patience is everything. There will always be a better setup around the corner. So let's look at this textbook example right here. First, look at that big, strong breakout candle and see that huge volume spike that came with it? That's step 1. Next, notice how the pullback is super calm, drifting down on really low volume. That's step 2. And right there, that's our trigger, a beautiful, clear bullish confirmation candle. You enter after it closes, put your stop below the zone, and look at that. The price continued the trend perfectly. And hey, don't forget, this whole thing works exactly the same in reverse for bearish setups. A support level breaks, price comes back up to retest that broken support as new resistance, it gets rejected, and then continues its move down. All the same rules about volume and confirmation candles apply.
It's the same pattern, just flipped upside down.
All right, that was a lot of information, I know. So let's put it all together into one simple, easy-to-use checklist. Think of this as your final filter before you even think about placing a retest trade. Before any trade, just ask yourself these 4 questions. 1. Was the breakout strong with good volume? 2. Was the pullback slow and controlled? 3. Did a clear confirmation candle show up? And 4. Is the overall risk-to-reward structure logical? If you can't say yes to all 4, just skip the trade. It's that simple. This system alone will help you avoid so many common trading traps.
So, to wrap it all up, why is this one of the safest entry methods out there, especially for beginners? Well, because it forces you to wait for confirmation, which dramatically cuts down on your chances of getting caught in a fake out. It also gives you a very clear, defined, and often smaller stop loss, which helps improve your risk to reward. And maybe most important of all, it builds your confidence because you're trading based on a clear, rules-based system.
Hey, if you found this breakdown helpful, do me a favor and comment retest down below. It lets me know you're getting value from this. And of course, make sure you're subscribed so you don't miss the next masterclass. Until then, trade safe and remember to be patient.